Hi everyone, today I'll talk about Carnival Corp, which is a stock that I currently own in my portfolio. But after Monday, I own even more shares in Carnival Corp. I extended my position by about 1/3, and also on Monday I bought more Alibaba shares, and I also sold one stock as well. Well, not sold it all, I sold about 1/3 of it, and I will reveal that stock on about Sunday when I'll make that video. But I made a video the other day talking about me adding shares into Alibaba, and I'm going to make the video today talk about why I added shares into Carnival Corporation. And like I say, it is a stock I already owned, and I kind of extended that position by 1/3 on Monday. Now, there's a few reasons why I bought even more shares into Carnival Corp, which is what I'll talk about in a little bit. Obviously, Carnival Corp stock is down big time. It's off its 52-week highs set back in January 2018, and it hasn't seen prices like this since about 2012. So that kind of says that the stock is discounted massively, and we'll talk about some of the positives of the stock, some of the negatives and the reasons why it is down at that price, and then we'll also look into the fundamentals of the stock as well, and then I'll kind of just give my overall opinion towards the end. Now, Carnival Corp is a stock that I bought in at $56 a share. Now, previously, my kind of position was towards like the low end of the 50s, like $50, $51 a share. So since the stock's dropped even more, I've bought even more shares into the company just to kind of cost down a little bit. And the reason why is because I feel like the stock's still in a pretty decent position. It's fairly discounted, and to get it cheaper is really good. And with it being cheaper, another thing is that the dividend yield has popped up even a little bit more now. So that kind of says a little bit more attraction to me, because one of the main reasons why I got into the stock was because of the dividend yield, which we'll talk about in a second. So like I say, the dividend yield is at 4.31% now, which is a good dividend. It's a dividend that have continued to grow quite often. And I think that for the price it is and the dividend you're getting, I'm pretty happy with that. The P is down at 10, which once again is quite a low P for the stock. It never really trades at like a really high P, but a 10p is pretty decent. And for the industry as well, it's a pretty decent P. The next company, I always like to compare Carnival to Royal Caribbean, which is P somewhere around like the 13 range right now. So 10's pretty healthy right there. And like I say, if we compare it to previous P's that it's had, it's actually pretty low as well. EPS is still set to grow at 10.3% rate, which is really healthy. And sales is still set to grow at 7.3%, which is really healthy. Now, these figures could change slightly because of the things that I'm going to say in a little bit, some of the negative reasons. But at the moment, that's what analysts are kind of predicting. And on this channel, we are looking kind of for a 1 to 5 year hold. We're a long-term investor already on this channel, and we talk about long-term investments. And when I buy a stock, I'm kind of committing to a year to 5 years down the line. And like I say, a year, 5 years down the line, I kind of predict myself getting some of that healthy dividend yield. And also, I believe that the stock price could go up slightly as well. Now, as a long-term investor, I look to stocks that are going to continue growing, and I also like to get stocks at a discounted value. And at the moment, Carnival is on a 34% discount, and like I say, this has been since 2018, and off its 52-week low, it's down about 34%, which is kind of attractive for me to get into. I don't really normally buy a lot of stocks near the 52-week high. I kind of wait for a little bit of a pullback for me to get into, and right now we've got that going on at Carnival Corporation. So I did listen to an interview recently by the CEO of Carnival Corp, and when I listened to his interview, it was really interesting. It's always good to kind of, if you can get some like interviews with the CEO, just to keep up with what they're saying. And also, if you listen to the earnings call as well, that's obviously a great thing to hear information on what's going on. But he did sound really bullish about the company, and on the interview, he was talking about why the stock was down massively after an earnings report, and it's cutting its outlook, and him talking about that. But he sounded really positive going forward about the stock, and that was really interesting. I do really like the management in the company. And the management of the company is something that you should always take into consideration, really. Now, Carnival Corp itself is the biggest cruise line out there. It currently holds 44.2% of the market share of cruise companies. And when I do like to invest in a stock, I do like to kind of get the market leader in that kind of industry. It's something that I've always done. The second biggest one is Royal Caribbean, which is a company I do really like as well, and I'll talk about them in a little bit because there's a few things that I do want to consider. It's about the negative points, so I will talk about them. But when we look at Carnival Corp, when I talk about a value stock, when I get into a dividend stock, the P is always a bit of a standout one for me. And we look at the discount of the P as well, and that's the lowest since 2012. Another positive, obviously, is the dividend, and I believe that they can carry on growing that dividend, and it'd be a nice little dividend earner. So even if the price doesn't go up, I'll still have dividend coming in, which would be really nice. A few people do think the dividend will get affected, which I'll put down here in one of the negative reasons in a little bit. But there's also a few things that might suggest that it won't get affected, but we'll talk about the dividend a little bit later. But it is at a good dividend right now. Insiders are buying shares now. I was listening to the interview with the CEO, and he was revealing how many shares he is buying into Carnival Corporation. I think it's something around the 2 million mark or something that he bought recently. And for me, if I always hear like insiders buying the companies, and it's the exact reason why I end up investing into Walgreens instead of CVS, is because when insiders buy shares, that sounds like a really good. It's a really good signal for me, because if the insiders buying it in the company, they know things that we don't know, and they kind of must think the company is going in the right direction. Otherwise, they would not do that. If they think the company is going to go downhill even more, then they must be thinking, let's not buy any of the shares in our company because we know that we're going to be hitting a few problems. If they're buying shares, it kind of makes you go, well, they must be thinking their company's really undervalued. They must think in the long term they're going to be able to deal with some of the problems they have and continue to grow going forward. So that's something that I really like seeing when they're buying the shares of their own company. Always demand for cruises. When we look at cruise companies, you know, they're always growing. The sector's always growing. It's a market that is going to other countries, especially like China now. China is potentially a fresh new market that's growing fast for cruises. We could be looking at countries that are developing even more, like India, and the cruises going over there. So that's a positive as well. You know, it's an industry that is carrying on growing. Just like how Boeing, when we look at the air industry right now, there's even more flights, there's going to be even more cruises. And as well, the last point, on a massive discount, like I say, I like to get stocks on discount. I don't like to buy near 52-week highs, really. Unless it's a company that I kind of look at and I feel, at no point do I see them having a pullback, like in Microsoft and Visas. At no point do I see that stock dropping 20% unless there was a recession. So for me, I do like to buy stocks on the discount, because I then feel like I can make more profit on that stock by holding it and buying it cheap. So the reason why the stock is so cheap right now is there's a couple of negative points out there, and I'll talk about the negative points and why other people are kind of selling that stock right now or not buying the stock, or why the stock really is at this price right now. And one of those points is the lower end of the cruise companies that are out there. So a lot of profits for cruise companies tend to be a lot of the inboard purchases, so the margins tend to be okay for cruise companies. But where they make a lot of money is by people going on the cruises and then buying a lot of extras. And the profit margins on that, I know at Carnival it's something around 83% profit margin, which is insane. And with it being the lower end of the cruise companies, you don't really get too many people going on cheap holidays and then spending a lot on the cruises. They go on cheap holidays and then they kind of stick to the budget they have. Whereas a company like Royal Caribbean, you've got a higher line cruises, and that means more and more people are going to be buying things on board. And like I said, I kind of, when I do buy leisure companies, I do tend to go for the higher end company because of that reason. And if Royal Caribbean was at this kind of discounted rate that Carnival has, I would choose Royal Caribbean over Carnival, but it's not. And Carnival still has that kind of great profit margins, but it just can't tap into that market as much as what Royal Caribbean can do. And I understand that negative point. But at the same time, it's still doing great profit margins on the kind of inboard purchases that it does have when people do go on them cruises. My second negative point that I've really picked on is that expensive oil prices are really affecting the company, and this was kind of common in the earnings report, that oil prices are going up quite a lot quicker than what cruise ticket prices are, and that kind of affects margins. But that does happen from time to time. We do see a big shoot in oil prices, and eventually they do settle down. Sometimes even can go a little bit cheaper, but oil prices do always go up, and sometimes they do spike a little bit quicker going up. And I think for me, this is just a temporary thing, that in the long term that it will settle down, and this won't really be a problem too much for Carnival going forward, because it is a problem that just pops up every kind of couple of years. Another point is geotensions and problems with countries where you can't have a certain cruise line going through. That always happens, and that's the same. It's just a trend. You know, sometimes there's just these problems. Eventually, a year, 2 years down the line, it'll calm down, and the cruise lines can go back to that kind of way. It's just a problem that does happen, and eventually it will sort itself out. It's just one of those things in cruise companies. Number 3, and this is kind of like number 5 point as well, is there's a bit more debt taken onto the company, and a few people say that's. I'll talk about all these 3 points because they're very common. So there's more debt on the company, and this is for 2 reasons. Some of that debt was taken on to help refurbish the ships, which were a little bit dated, and I've seen some of the interior and they were quite dated, so they did need doing. But that will always help to the customer experience. That's just kind of like a one-off thing. If people are going to be happier and it's going to make you more money, it's good that they're investing that money and making it a better experience. It will pay off in the long term. You know, when we're kind of taking this debt on to improve things and keep the company going forward, it's a positive. We can't keep the cabins in a bad condition. It's better to see a company progressing, and if they have to take debt on to do that, that's fine, because when we've got a company that's growing, they should also be okay to take this debt on and then pay it off going forward. And people are a little bit worried that they'll take more debt on to pay the dividend, but the CEO seems to think that this should be okay if they are going to do that, and people are saying that they won't be able to increase that dividend because of the amount of debt they have, but the CEO seems pretty fine with it, and they seem to be buying a lot of shares, and it seems to me that they kind of feel like they won't have that problem. And we have got a healthy dividend yield anyway, so if they were kind of to like cut it for a year, 2 years, it doesn't matter, because we're still at a like 4.3% dividend yield. You look at like Royal Caribbean, and theirs is even less than that. I think it's nearly half of what Carnival is. So it is a really good dividend. So if they were to like just miss it for a year, 2 year, that would be totally fine. But the CEO was at the same time, he seems pretty chill by it. So I'm kind of not too fussed on that kind of point of view, because it's pretty good anyway, and whatever happens, I'll be happy with going forward. So that's me talking about me extending my Carnival Corporation position today, guys. I hope it helped you if you're looking into the stock, or if you were looking or just seeing what I'm doing in my portfolio. I hope you did enjoy the video. Like I say, I'm quite happy with this position, and I wouldn't really sell this stock until it got back into the probably like 60, 70, $80 range, to be honest with you. That's where I kind of see myself going, because I'm not in a rush to sell it, because I'm kind of planning on picking up some of them dividends really going forward. And to be honest with you, I probably won't buy any more shares into Carnival. The only time I'll probably buy any more shares is if it goes down to about $42 and takes like another 10%, then I'll probably extend it a little bit more. But unless it does that, then I probably won't buy any more. And like I say, that's kind of the price targets where I'm looking to sell at. So that's me talking about Carnival today, guys. If you could give the video a like, subscribe if it's your first time watching, and I'll see you on the next video, which will probably be me talking about the stock that I sold on Monday. I haven't fully sold that position, but I've sold part of it, and I'll talk about that on probably Sunday, I think. So I'll see you then, guys. Thanks for watching. Remember, give the video a like, subscribe, and I'll see you then.